welcome back to Metals, Money, and Markets. We are December 21st. For MiningClips, Rob Goodman, and as always, Mickey Fulp, the Mercenary Geologist, will run through this. Wow, what a bunch of volatility here, Mick.
Well, embrace volatility. Gold ended up at a 5-month high yesterday at 1260, dropped off a bit today, up on safe haven demand with the markets cratering. Interest rates are down. Fed came out with a relatively dovish statement, but the market already baked that in, so it sold off on that. The market's selling off on good news. It's selling off on bad news. It's just selling off. U.S. markets are plunging this week. We'll get to that later. Let's go ahead and look at the other precious metals. Silver up a whopping nickel to 14.58. Platinum up $2 to 7.87. And again, I got to emphasize it's at a 10-year low. And this is a buying opportunity for platinum, folks. Physical platinum. Contact your bullion dealer. Meanwhile, palladium needs correcting. It came off about $10 on the week. It's still at 12.13 for 0.8% loss.
And copper kept the trend. Pretty bad week here.
Yeah, well, copper actually ended up at 269 yesterday, which is it's been a while, since 3 months or so since it's been that low. It was up a couple of pennies today. Still closed at 271, down 2.5%. This is a directionless market for copper, and not only that, the entire base metals space, because the specs have left the copper market. You remember they were massively long a year ago, then they went massively short. Now they're out of the market, so it's gonna waver here for a while, I think. Second month, 2.5% backwardation. One thing that's positive is copper miners, base metal miners at a whole are very positive on the strong fundamentals. And so they're gearing up for developments and exploration. But Andy Homer, Reuters, one of the best analysts in the mining business, posted a piece today called "The Politics of Tariffs" or thereabout. And really it is the politicians and the trade tariff talks that have really upset the market and skewed what are really good fundamentals.
And heading over to the energy markets, where oil just continues to slide, 11% off.
Yeah, it's another one of these things. Can't get a bid. 17th month low at 45.35 for 11.5% loss on the month. There's the world's awash in oil, Rob. It's all that it amounts to. There's too much oil. We've been too successful finding oil. No matter what news comes, oil price goes down. Rigs up +9. That's probably negative with oversupply. Production off 100,000 barrels, estimated to 11.6 million barrels a day in the U.S. Inventories were flat. The OPEC cuts are supposed to take effect in January, but OPEC is doing absolutely everything they can right now to make that transparent. They're going to publish the amount of cuts per country, something they've never done before, to my knowledge. These OPEC countries, especially in the Middle East, are all hurting at these low prices. They've got to get the price up. Meanwhile, the Venezuelans' production, 1/2 of what it was in 2016, now at 1.1 million barrels per day. Uranium was flat, 28.63, taking a breather here from the uptick.
What happened to peak oil? Remember that?
Rob, your question, and bear in mind, let's let the listeners know, I did not prompt you to do this. After market today, sometime this evening, subscribers will get my new think piece, my new essay called Peak Oil, Peak Gold, Peak Whatever, Fooey. So it's a white paper, and it'll be in your mailbox sometime this evening.
I'll look forward to that. Heading over to the currency markets here, dollar off, euro wins, loonie way off.
Yeah, the dollar had quite the volatile week with a low of 96.3 a couple of days ago. Big rally today, went over 97 toward close at 97.03, off what 64 cents on the week. Euro at 113.6, the same amount of gain as the dollar loss. That's not surprising. Meanwhile, the loonie is at a, doing the math here, 17th month low itself since May of 2017, less than 74 cents at basically 73 and a half. A lot of this has to do with oil prices, and geez, if you think anybody's in a world of hurt, OPEC be damned. The Canadians are really, their oil market is just trashed at this point. And I would think that's the reason it was down 1.5% on the week.
Finishing up the equities markets across the board, pick your poison, all off considerably. Sell off on.
Market, yeah, market massacre in the U.S. We could look at this as we're catching up with the rest of the world because all the world's markets are severely down this year. Germany 17%, Chinese last I looked about a month ago off 30%. So this was probably to be expected. We had a quadruple witching day today, which means futures and options expired not only for stocks but also indices and funds involved in that. So on huge volume today. We also have S&P rebalancing after market today, so there'll be continued volatility and volume. VIX as high as 30 and a half today, so that's another bump up. No matter what the market hears right now, it's selling off. We've gotten some mixed signals from the Fed. Good news today from the Fed, the market sold off. Government shutdown, market sold off. Navarro comes out and says we'll start working, but we're not going to have anything done in 90 days with the Chinese. Market sold off. GDP 3.5% growth year over year. Market sold off. Just the nature of it right now. Live with it.
Well, let's keep the trend, and TSX Venture sold off.
Well, and we expected that tax loss selling. We expect that to ease off, but with these major markets falling, it's still continuing. Toronto Ventures off 21% since early November 7th, right after I saw you at New Orleans conference. Certainly, tax loss selling is the reason. It's been long, it's been slow, it's been relentless, and it is ongoing. At some point, it's going to turn around. I was a big buyer of fire sale stocks this week, and I expect it to turn around. I expect to take some profits in the first part of the year.
Okay, well, I'm going to be politically incorrect and say Merry Christmas, Mickey. Appreciate the insight, and we'll catch up to you next week.
Happy holidays to you and yours, Rob.